What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session on EURUSD and these two entries that presented themselves in the London macros. If you're excited for the video then please go ahead and smash that like button, and with that said let's go jump into the analysis now and see how these two presented themselves. So as always we will start off the analysis on Forex Factory, just looking for red folder news. Wednesday the 24th, yesterday, was a barrage of red folder news during the London session, so it made it quite tricky. Today we don't have any red folder news during London session, but there is red folder news as New York AM session opens up for the euro and also for US dollar. So that could make this morning's session a little bit more tricky because we may be preparing for a red folder news drop. Let's jump into the analysis now on the higher time frame and see what we can gauge. So here we are on the daily time frame. Very tricky in my opinion on this daily chart. We are just ping-ponging between this bullish fair value gap and this bearish fair value gap. So we've been stuck in here for, well, almost a full week now with very little movement. Yesterday we did sweep the high, but then we closed straight back underneath. It's difficult to gauge where we are. Because of this, I'm tempted to drop down to the 4 hour. On the 4 hour, what's really interesting is we can see the first signs of bullish momentum. We've actually created a 4 hour unicorn model. So we had a high that was taken out. So that was the sweep of liquidity, which created a new high. Then we created a new low. So we've taken liquidity out on the low, on the sell side. But then price has pumped up and retaken this high. So this is our unicorn entry pattern. We've left a big bullish displacement candle here, which overlaps the breaker block. So this confirms a 4 hour unicorn. So although the daily is not looking great, very difficult to understand where we are on the daily chart. If we drop down to the 4 hour, the 4 hour bias for me shows bullish momentum. And so potentially we could be flipping bullish here, looking for higher prices. Also what's interesting on the 4 hour is we clearly have some relative equal highs here inside this 4 hour fair value gap. So this would be a really significant draw on liquidity. If this unicorn on the 4 hour were to play out, we could be potentially targeting the relative equal highs up here. So because I wasn't able to get a draw on the daily time frame, drop to the 4 hour, this kind of gives me a bullish bias going into the session. So if I'm bullish going into the session, I'm looking for hourly PD arrays coming into Asia. Just going to clean this up. So here's our charts on the 1 hour now. So we've got our bullish bias 4 hour unicorn setup that we're looking for. So we're looking for hourly PD arrays now to act as potential support for a rise higher. So the first PD array that I'm seeing is this bearish fair value gap that's just been traded through prior to London opening up. So this could potentially be an inversion fair value gap now. So this could act as support. So if price were to come back down into this area, this could be a nice region of support then to target higher prices. One thing to be aware of is we do have this swing high that was left between the New York PM session and Asia. So we've created relative equal highs here at the moment coming into the London Open. Another draw on liquidity would be this bearish fair value gap. Could potentially act as resistance if price does make its way up there. So currently the area of interest that I'm looking at is either interacting with this inversion fair value gap for a long trade or taking out swing lows for a potential reversal going higher on the current day. So from the Asia low to the high. The inversion fair value gap is in a premium, so it's not into a discount area at the moment. We'll drop onto the 5 minute and we'll begin scrolling through price. So we are looking at either a 5-minute unicorn entry model, which means that we need to come back and interact with an hourly point of interest, that being this inversion fair value gap at the moment, or the sweep of the gap time low between Asia and London. And we'll also be paying close attention to the macros, which starts 2:33. Let's just get this right. For macro number 1. So let's just see if we can come back down and interact with this inversion fair value gap. So immediately as London opens, we sweep those relative equal highs. So we've taken out that gap time high now. We've done with displacement, so we are closing higher. You can see on this lower time frame, we do have a new week opening gap, which is this orange shaded area just below the hourly fair value gap we marked out. Bearish fair value gap, that is. So we're coming towards the open of the first macro. We're drawing towards this fair value gap, and the new week opening gap has just been tapped. I'm going to drop onto the 1 minute as the macro opens. I'm going to look for an entry in the macro with a bullish bias, so expecting displacement higher into that hourly fair value gap. Coming into the macros, what I'm looking for is I'm looking for a sweep of liquidity with displacement in the wrong direction, and then I'm wanting an inversion fair value gap to take me in the right direction. So this is the dodgy entry pattern that he explains on his YouTube channel. I'm just pairing that with macro times. So we do get a displacement candle down. We've taken some liquidity on the first candle of the macro. So 2:33 is the opening time of macro number 1 in London. We've swept some liquidity. We've left a fair value gap at that point as well, so we've got a bearish fair value gap to keep an eye on. Got this large bullish fair value gap with an order block inside it as well. Obviously there's the London low here, so we do have a swing low and a swing low into the fair value gap. So for potential sweeps of liquidity, we have this low and also that low, which is in the fair value gap. So we've swept that low, leaving another fair value gap. So we're into this larger fair value gap. Order block here as well. So we're kind of layering PD arrays at this point. Come down, tap the top of the order block. So the eyes are on. We've got a volume imbalance that's just been closed through. Which is the first sign of bullish price action. Large bullish engulfing candle as well. So it's engulfed this initial candle. We're into that fair value gap. So we want to see that fair value gap closed through now. Tap of this order block into the fair value gap. 50% of the fair value gap's being respected. Close through. We don't do it. So we respect that fair value gap. Come a little bit deeper. Another sweep of that low. Still paying close attention to this fair value gap. We get a strong close through. So that's the first sign that we are now bullish. So this is now our inversion gap model. We've also got this order block here, which has been traded through. So we can either enter on the close of this candle or wait for a retracement back to the inversion fair value gap. So I would be tempted in this instance. We've closed quite far out of the inversion fair value gap. My ultimate target is expecting to take, we've got a swing high here, bottom of the new week opening gap, relative equal highs in fact. So that would be a really, really nice draw on liquidity. Ultimately, if we are bullish, we are expecting price to drive up into that hourly fair value gap. We've been taking out this liquidity as well. So an entry on the top of the inversion fair value gap. stop loss below the low, so I need 2 pip stop loss, or enter at market as this candle closes, 3 pip stop loss below that low. Sweeping that high, we're going to get 1.3R or 1.2R if we wait for the inversion fair value gap to get tapped. Obviously, we've got a bullish fair value gap there. So this is something that we need to work out. You know, when would be a good point to enter at market? When would be a good point to wait for a retracement? I'm looking for 2R in all trades. So if I want my 2R and I've got relative equal highs here, the best bet would be waiting for a retracement into the inversion fair value gap. Let's just see how this works, pans out. So we've left a bullish fair value gap here. So we have the order block, we've left the bullish fair value gap over this order block, which is actually now our breaker block. So we've got a unicorn model here. It's still only going to give me a 1.35. So we'd have to be aggressive with your stop loss management. Let's see what we get. Rejection off that balanced price range. Come down into the unicorn. So we've tapped the top of the breaker block here. Expecting a run on these highs. So this would be where you would want to go break even after taking these highs, or take 50% of the trade off and then hope to run some to 2R. So I'm still working on trade management on this system. Digging deeper into the inversion fair value gap. So the inversion fair value gap has been tapped now. And then we get a strong reaction off that inversion fair value gap, which is good to see. So gap higher. At this point, we do come and sweep that liquidity. So we have tapped this high here. So we'd like a break through that. So we do get a break through that and then an immediate reaction lower. So you ideally be looking to close 50% of the trade off and go break even at this point. We'll come back into there, so that would be in a break even trade. Price does come back down into this fair value gap. So I think with these macro trades, they're not set and forget. I do think that they need managing. So I would have been stopped out at this point. Price does ultimately reject off this fair value gap. Comes lower, back into the lower fair value gaps. Again, it's logical that we would rebalance these areas, I suppose. %50 of the fair value gap was respected. We have left obviously massive bearish displacement coming down here. We're closing over this bearish fair value gap into this bullish fair value gap. Would we take out the session high at this point? So we do eventually take out the session high, which was the ultimate target. So if you hadn't done any trade management and had just left it to run for the session high, then that would have made sense. We have just literally, look at that, tapped 2R by a pip. And then price rejects very aggressively. What's also really interesting is I mentioned that macros are drawn to macros. So you can see this lower macro here. I've even created a preset for it. We pump up, we tap the lower macro. So this macro comes, reaches the lower macro and then has a massive reaction lower. So it was potential 2R at this point. And then ultimately price melts after the macro. So that was macro number 1. I'm going to jump up to the hourly chart. And what we can see on the hourly is the price does come into... I'm just going to clear some of this stuff off. We created another hourly fair value gap while we were playing around in that macro. And price has just come and tapped into the hourly fair value gap at the open of 3 AM. So into the silver bullet hour. So let's just drop back onto the 5-minute time frame now. And we know that we've got an hourly, in fact we need to mark out that hourly fair value gap. Got an hourly fair value gap here now. So if you were playing the 5-minute unicorn model, you now have a new point of interest that was created during that 2 a.m. candle. So we've got an hourly fair value gap here. So this is in line, obviously, with the 4-hour unicorn we've already established. We've created a 1-hour fair value gap. We've not come back and interacted with the inversion fair value gap. So we've come into that hourly here. So this displacement lower has now taken us into the hourly fair value gap. We've obviously swept a high here. So we've got, as far as market structure goes, we put in a higher high, lower high, higher high, lower low. So we've swept that low. So we need to break this, retest, and then go. If that happens, then this is your breaker block. So as we scroll, we get a good reaction coming up. So you want displacement through this. And that leaves our 5-minute unicorn. In fact, let's just mark that as a unicorn. Which would give you an entry on the 5-minute. Stop loss would be below this low here. So 9 pip stop loss, 2R for our target. Which nicely lines up with sweeping the high from the New York PM session. So let's see if our unicorn on the 5-minute gets tapped. But to remember, we do have the hourly fair value gap that we marked out here, so potential level of resistance here. No entry on the unicorn yet, so it's pulling away at this point. So this hourly fair value gap has flipped. Potentially it's an area of support now. Price has obviously not come back and immediately tapped the unicorn. Is it 1 hour up? It's not quite 1 hour up yet. Back through. I'm looking here now, we're into the second macro. There's no entry on the unicorn yet. So we'll leave that as expected. We'll drop down onto the 1 minute time frame. So the second macro has opened. What again we were looking for, we're bullish. We've seen that we've now flipped this 1 hour fair value gap. So we are looking for a sweep of liquidity with a inversion fair value gap at the open of the macro. So you can see the macro opens up at this point. We displace lower. We've swept liquidity here. This is liquidity that was created before the macro. We've swept additional liquidity at this point as well. And did we sweep this liquidity? Not quite, swept the low there. So we swept a couple of levels of liquidity. Got a large bearish inversion fair value gap, which was initially respected. Big, large bullish candle, come down, created another bearish fair value gap. It was closed over. It was closed over, so this is quite significant. It was closed over with a bullish fair value gap. So we had a balanced price range at that point. And so that shows really strong momentum to the upside. So this is an instance where I would be tempted to enter on the close of that candle because we've got strong momentum coming up, leaving a balanced price range. Again, I'm not saying this is definitely the way to trade it. This is how, in hindsight, how I think I would have traded it. Stop loss at the low. It's only a 2 pip stop, so a candle close there over an inversion fair value gap. So it's a much tighter stop before this runs away. 2R, so we're looking for 2R. The logical take profit is this high here. So is that going to give you your 2? So that does give you your 2R. This has just pumped up and tapped 2R now from that entry. So if that was an entry on the close of this candle as we closed over the inversion fair value gap, so not waiting for a retrace, you would be in. If you entered waiting for a retrace on the inversion fair value gap, your entry would have been slightly better, because this candle, this second candle, does come back into the inversion fair value gap. So the entry is either the entry is either on the close of this candle, which I think is what I would probably have done, or waiting for a retrace back into the inversion fair value gap, targeting 2R, which has just literally got tapped. Now, I'm ultimately expecting those highs to get ran. Back down to entry. We can see, again, I'm just looking for previous macros. So we have a previous macro high here, which would be a level of liquidity that I would be interested in. So we just swept that macro high before our macro opened. Price actually melts. So you would have just got your 2R if you'd have closed using if you'd entered on that close there, you'd have just got your 2R before price absolutely melts down. If you'd have waited for a retrace, then you'd have definitely got 2R because it was 2.3. 2R was just up here, sweeping that high into a fair value gap. And so 2 trades there. In the macros, the 5-minute unicorn still hasn't been tapped. We are coming to the end of the session. 5-minute unicorn 433 still hasn't tapped it. So that's right at the very top. So would you have been triggered in? The high of the unicorn, so if you look up here you can see the high candles. The high of that candle, which created the top of the breaker block, is 8918. The low of this candle is 8918. So that is the exact same price to the absolute point. So you wouldn't have been triggered in there if you had a limit order. That wouldn't have taken you into the trade. So we're still not in yet. Let's look for 5 AM. Wouldn't want to take a trade after 5 AM. That's the cutoff point for our session. And we're past 5 now, so there was no entry on the 5-minute unicorn inside our trading window. Just scrolling through now. So we'd have had 2 profitable macro trades at this point, based on inversion fair value gap entries. Potential 5-minute unicorn set up, however, it wasn't triggered inside the trading window. Has been triggered now, obviously into the fair value gap at this point. Quite a deep retracement. Strong reaction off the 5-minute unicorn. And we are going to be approaching live time any second now. Some nice liquidity to run at for the unicorn model. Oof, almost taken the bottom of the breaker block out. So that 5-minute unicorn's still playing out. And here we are. I've given it a little bit of time now, so a couple of hours just to see how this unicorn would have played out before releasing this video. We knew that we had news coming in at 8:15, I believe. Yeah, 8:15 Euro news, 8:30 US dollar news. So you really would have been wanting to be out of the trade before that point. And we can see as the news drops, price went absolutely crazy. And the 5-minute unicorn wouldn't have been a profitable trade. We did eventually get to, on the news drop, it did pump. Stop loss below that low, so would you have got 1R? So you could have potentially got to 1R, so break even before the news drops if you were playing it that way. But ultimately after the news, price has turned bearish and now is seeking much lower liquidity. So yeah, the lesson from that point, I suppose, is don't take unicorns if they're outside the trading window. So this did trigger outside the 5 AM trading window. And obviously we don't want to be in trades when we know that red folder news is on, or at least we want it to be break even or risk free before the news driver does drop, so that if it does do this, we are safe and secure and our money's not at risk. So I hope that was useful. If you did find the analysis useful, then please be sure to leave the video a like. I would really appreciate the support. If you have any comments or feedback, then drop them down below. It's always great to hear from you. And if you want to see more videos like this, then do consider subscribing. I'm dropping videos like this more or less every single day, or at least every day that I do take a trade. It's part of my journaling process. Thanks for watching, and I'll see you again in the next one.